Hello, everyone. I'm Jean-Claude at BeyondMystic, and welcome to this very special report. Today, Crisis Ahead with Mr. Bill Holter and Andy SCHECTMAN. You can find Bill and his work here at jsmindset.com. And of course, Mr. Andy SCHECTMAN, president of Miles Franklin CEO. You can find him at milesfranklin.com. Bill, Andy, welcome back to the show.
Great to see you, JC. Good to see you, Billy.
Thanks for having us.
Excited to have you on. And as the poster says, there's a crisis ahead. And I wanted to thank all the audience members for joining us here today on this live interactive show. We'll try to take your questions here as we go along, but we're going to lay down a little bit of track here before we go. And I wanted to point the audience to this interview you just did with Greg Hunter at usawatchdog.com. Bill, explain what you mean here. The headline for this particular interview is they're pulling the plug. It's game over. Explain to the audience here what we're looking at and how this time it's absolutely different. Bill.
Yeah, it is different simply because this is you've got the Fed raising interest rates, and of course market rates were already moving up before the Fed even talked about tightening. Interest rates moving up now will be a disaster because of the amount of debt that's already in the system. I mean, if you go back for the last 40 years, every time the Fed tried to raise rates, something would break. This time around, everything's going to break. I mean, a perfect example, look at real estate. Mortgages were what, 3 1/8 back in January. They were 275 back in November, and now they're 6 1/4. So if you qualified for $1 million mortgage January 1st, you only qualify for about a $500,000 mortgage today. Yep. Going one step further, so you own a piece of real estate and you're looking to sell it. Now you got way less buyers that qualify to buy your property. And if you go back to 2008, what did they do? 2009, they started with QE. We've been on life support ever since. And basically what they're doing is they're pulling the plug out of the wall and taking the patient off of life support. And I'm telling you, this patient cannot live without life support, because no Ponzi scheme can function. No Ponzi scheme can continue without new monies coming in, and new monies are debt, new debt. The debt just can't be serviced at rates where they are now or higher. Think about the federal debt. The federal debt of 30 trillion at what, 3 1/4, 3.5% interest rates. That's $1 trillion a year just in interest alone. So they're blowing the system up. This is not. I think it's by design. It's planned.
Well, let me ask you a specific question on that, Bill. A lot of viewers are going to look at this and say, well, JC, that's hyperbole again. The Fed raised rates a couple of years ago. They got spooked and they lowered them again. They're just caught there. And this is what's happening now. They're raising, they're doing their thing, but they're eventually going to have to capitulate and lower them. Is that possible right now? Or does it seem like actually what they're trying to do, as you're saying here, is pulling the plug? How would you answer that question, Bill? What are the odds that they're actually trying to do it and pull the plug this time?
Oh, I think that's what's happening. I mean, look at the policies that are being put into place currently in the United States. I mean, the first thing Biden did was shut pipelines down. I mean, they're doing things on purpose. The supply chains are breaking. Things are being broken on purpose. And yeah, you could go back to 2018, 4 years ago, when they started to raise rates, and then they had to turn around and start QE all over again. But how much more debt now is in the system? How much more in the form of derivatives is in the system than there was back then? Yeah, I mean, you're talking about much, much more debt, and the higher interest rates are going to bite more debt. It's all about servicing the debt, and if you do the math, the debt cannot be serviced.
JC, let me add something to that on top of what Bill is saying, because I too believe that this is either our politicians are incredibly naive, or they know what they're doing, and the intended consequences of their actions are real. I want to look at it from a different perspective. So, with inflation at 9%, and we know that those are bogus numbers, right? On the CPI, we know that it excludes food, energy, and housing. We've had this discussion many times with John Williams, even together on your channel. Inflation is probably double that. But even using the 9% metric, getting tough on inflation is not raising interest rates 3/4 of 1 point. As Bill mentioned, the mortgage rates have doubled even before they raised rates. This is before they raised rates 3/4 of 1%. With virtually nothing, the rates rose, but on the 30-year mortgage. But the Fed isn't doing anything, right? If the Fed wanted to get serious, they would have sold off their balance sheet once they told us it wasn't transitory. They wouldn't actually add it on to it. They would raise rates 500, 600, 700 basis points, 800 basis points to kneecap inflation, but they can't. But I want people to look at things from a different perspective. I've been on your show for a long time talking about certain things that I've seen happen. We talked about gold being reclassified tier 1. We talked about the Belt Road Initiative, where 75% of the world is being connected by Asia and Africa. Do you know that already almost 10 billion in transactions have settled on the new digital yuan in this Belt Road Initiative plan that they got going, which is connecting 3/4 of human population, and the U.S. isn't part of it. We've talked about how the U.S. its petrodollar reserve status is being challenged by Russia, now striking a joint military cooperation agreement with both Saudi Arabia and Nigeria. We talked about Nigeria selling their gold to China for yuan, and Saudi Arabia all but doing that right now. We see Russia and India striking joint unilateral trade agreements in rupee and in ruble. We just saw the other day a new trade route going from Iran to India. 85 or 90% of the world is still trading with Russia. All our sanctions have done by weaponizing the dollar is, I believe, hasten the demise of the dollar. Like Bill is saying, it's planned, but instead of the Fed being blamed, because as Milton Friedman said, inflation is always and only a monetary event. It's the increase of the money supply. It has nothing to do with Putin. It has nothing to do with supply chain. That only exacerbates the pain. Inflation is because of the increase in the money supply. And the Fed doesn't want to go down as the one that blew up everything, because stocks, bonds, and real estate are all inversely correlated to a rise in rates. That's when it collapses, right? But how about this? How about you do all of these things? You incentivize the world to de-dollarize, you weaponize the dollar, you push Russia out of SWIFT, right into the open arms of the Chinese and their SIPs, the cross-interbank payment system, their Belt Road Initiative, the fact that they're the largest accumulators and producers of gold in the world, and now gold is tier 1. The fact that the digital yuan has done 10 billion in transactions. Can you not see a moment where the BRICS nations are saying, shit, are we the ones that are going to get sanctioned next? Are they going to take our stuff? How about we all coalesce? And all of the gold that we've been accumulating, we back on this new digital yuan technology, and we issue a BRICS-backed gold currency and watch what happens to the dollar. If you want to hear the Great Reset, where does the Great Reset come from? It's the fact that since 1974, every country on the planet has had to own dollars in order to buy oil. That is coming to an end. And if all of a sudden OPEC says, you know what, we're opening it up to all sorts of currencies and gold, bang, the dollar gets dropped by everyone, comes flooding home, interest rates spike, so the dollar collapses, stocks, bonds, and real estate all collapse at the same time. There's your demolition. There is your Great Reset. There is your scapegoat. It was OPEC. It was Putin. It was the Chinese. It was the Indians. It was those damn BRICS nations. It wasn't us. And I think if you want to take it out a step further and you believe this is the end, it ain't going to come from the Fed. They do not have the balls to do it. If they did, they would have already raised rates considerably higher than where they are right now. They would have already sold off a bunch of their balance sheet. They wouldn't be pussyfooting around their jawboning and letting the market do it on their behalf. But by weaponizing the dollar and incentivizing the rest of the world to say, are we next? Right into the arms of this Belt Road Initiative, the new Tier 1 reserve, all of these deals that are being set and struck outside the dollar, to me, that's where the real issue is. Somewhere in between the Fed and the BRICS nations taking control of, I think, a primary challenger to the dollar's world reserve status. That's where it all blows up.
It's the perfect storm. Let me bring, thank you for that, Andy. Appreciate it. Let me bring Bill on here. You just mentioned, Andy, of course, they're throwing the blame around right now. If you look at the White House, first it's the Fed, then it's the people using their credit cards, then it's the oil companies and the refineries. Here we had a good graphic the other day, and it relates to what you're saying here now, print, of course. And at the end of it, it said, oh, it's Russia's fault. Because it wasn't transitory. It wasn't good for you. Of course, inflation is here to stay, and it's a lot bigger than we've told you, by the way. So we have this guy in the White House here right now being completely confused as to what's happening. There's no leadership there. But Bill, I wanted to ask you, you've been tracking this with the folks at JS Mindset for your audience members for quite some time. But we're looking now at a very, very strong ruble. This is the 5-year chart. We're at 56.75 now on the US dollar. All of this is in result to this new policy change to back the ruble by gold. You talked about this huge arbitrage opportunity about a month ago or 2 months ago when you're on the show, and now we're seeing maybe the results of this. Explain to the audience how this ties in to the perfect storm that Andy was just talking about.
Well, what you're seeing there is Russia has come out and said, if you want our goods, if you want oil, if you want gas, if you want wheat, fertilizer, what have you, you've got to pay us in rubles. So what that does is it reverses what happened back in 1973 with the petrodollar. The petrodollar, that was all about if you wanted to purchase oil, you had to do it in dollars. Well, if you want to purchase Russian goods, you've got to do it in rubles. So what you're seeing, that chart shows you, there have been currencies, there have been dollars sold, yen, euros, you name it. If you wanted to buy Russian goods, you had to sell your currency to buy rubles. And that buying of rubles, that's showing up in the chart. I could envision maybe a year, 2 or 3 years from now, I could envision the ruble actually trading at par with the dollar. And that chart shows you it went well over one or well under 1 penny.
Yeah.
When it got to 140, it took 140 rubles to purchase $1. So it was worth less than 1 penny. But I can envision that number coming down to 1 to 1.
Wow. Let me just invert that chart here for people to see it. It makes a little bit more sense if you look at it the other way here. We saw the dip in the value of the ruble here when the conflict started, and now we're seeing it again on the rise here. Right. And what you're saying is we might get to that 1-to-1 status. Let's talk about that in terms of timing. A lot of people are looking at this, and they got the memo finally, Bill. For a lot of people, they were like, "Well, when's it going to happen? When's it going to happen?" And you and Jim Sinclair at JS Mindset, we were guys saying it's already happening. You guys just need to pay attention. We're seeing it now. But let's talk about the next couple of months here. You're saying they're pulling the plug. How long is it before people see real catastrophic results, whether that's their pension plans, their home values, the prices of food here, and perhaps the availability? Bill, you were famous on the show a couple of months ago by saying, hey, for the first time in history, if you have money in the States here, you still can't get the stuff you want to get. That's never been seen before. Right. This is a big change, and that's getting worse and worse by the day. Explain to the audience here how this 1-to-1 peg here, maybe how soon that could be, and what those results might look like here for North America.
Well, I mean, obviously a 1-to-1 peg would mean that the dollar has crashed in purchasing power. So you'd be looking at, a cup of coffee right now costs you what, $2 or $3? It might cost you 10. It might cost you 20. A gallon of gas could be well over $10 a gallon. Yeah. The bottom line is the purchasing power of the dollar is going to collapse. And I think that the collapse itself will, if you want to call it, come in waves. I think the last wave will be people's pension plans. You've obviously the first wave will, you've seen it in credit markets already. If you look at bond prices, they're devastated. Bond prices are down 15, 20, 25, 30%. And that's what underpins, that's the foundation to the financial system, our bonds, is the credit markets. There's so much in the form of derivatives outstanding. There's well over 1 quadrillion with a Q worth of derivatives. So the paper markets, the equity markets, are far larger now than the central banks can handle. I think that's going to be a flashpoint. I think real estate, which is always slower to move, and the reason it's slower to move is because you don't get a price printed in the newspaper, showing you, well, your house just lost 15% over the last 30 days or whatever. That realization is going to happen. You're already seeing housing starts collapse. You're seeing resales collapse. You're seeing new home sales collapse. But yet prices have not yet collapsed. And that comes. Price always follows volume. So people are going to find out that, they went out 6 months ago or a year ago and they bid $50,000 over the asking price or $100,000 over the asking price just to be able to close on that property and own it. Well, guess what? That asset is going to turn into a liability. And when I say it's going to turn into a liability, taxes are going to increase. If you did it with an adjustable mortgage, your monthly payment's going to increase, and it's going to be like an albatross around your neck, because who's going to be there to buy your property? And your property is going to be bought, if it gets bought, at much, much lower prices. So it's all happening, and it's all function of interest rates going higher. And what Andy mentioned, I mean, if they say inflation's 9% and they want a positive Fed funds rate, that means they'd have to run it to 10 or 11%. That's an impossibility. That would bankrupt everything. I mean, the only thing left would be smoke.
That's why I think it's going to come elsewhere. And I guess, just to clarify, what Bill is saying is, look, the importance of what he's saying of monitoring bank credit is that whenever it contracts, it always precipitates a crisis, always. And I think we're moving to a period of time where these big institutions, look at Jamie Dimon just said there's a hurricane out our back door. These big institutions are rapidly moving towards, I think, protecting what they have and fear over easy money and greed. And so as we see a contraction in credit, things are only going to get worse, and especially in the environment that we see right now. So wise words to listen to what he's saying.
Well, I want to bring this piece into it also. If you look at right now, there's a crazy setup happening in the crypto market. This is the total cryptocurrency market cap for the last month. We were at the highs there, 1.3 trillion or so, and we're sitting here this morning at 900 billion something. Now, that's a huge drop compared to, if you look at the chart of silver for this last month, which is holding. Gold is doing extremely well, given what we're looking at here in other markets, but including the crypto market. Why, let's start with you, Bill. Why is gold and silver doing better, generally speaking, here, even though everything else around us is collapsing? What do you make of that?
Well, first off, they're both real. I'm on the record saying that these cryptocurrencies, they're digital air. And I think people are going to find out when all is said and done that that's true. The other thing is, just about all assets on the planet have been held up and their prices pushed higher by the use of credit. However, gold and silver, credit in those markets are to the short side, not to the long side. So when the credit markets break and the margin calls are issued, everything's going to have to be sold except for gold and silver. Those are going to have to be bought because of the shorts outstanding.
Wow.
They've been artificially suppressed.
Right. Well, what's also happening, Andy, are you seeing people now, Bill just mentioned the margin calls, people being stuck right now with these huge margin calls and deciding, hey, maybe I need to sell some crypto to pay for all of this. What's happening? What are you seeing right now from your neck of the woods?
Most of the people who talk to us about crypto are still hanging on and waiting for one big rally. I hear it over and over and over and over again that they expect one big rally, and then they're going to sell their crypto. I guess the one thing that makes me nervous with the crypto market is how it's incestuously tied to Wall Street. And as Bill mentioned, so many of these assets have been blown up to extreme values because of easy money. Where, look at Michael Saylor, I think, isn't that his name? The guy that's got a $200 million loan or borrowed $200 million to buy Bitcoin for his fund, and it gets a margin call at $20. We're almost there. The average price was at 30, but that's indicative of many asset classes and the way that these big funds have borrowed money at next to nothing, pumped it into stocks, pumped it into real estate, pumped it into bonds, pumped it into cryptocurrencies. And if the easy money is over, if they pull the spigot or pull the easy money and the stimulus and the credit, all of these markets which lack price discovery are going to deflate to a level that is commensurate with reality. And we're a long ways away from that right now. So no, the crypto people have not capitulated yet, but the people that are getting nervous are the people who are watching their 401ks and their IRAs shake, the people who are concerned with leaving money in the bank. Those people are very concerned. But look, I guess I'll just simply say it this way. 0.5% is the current number allocation of precious metals to people's portfolios across the entire financial gambit, from Joe Sixpack to the Harvard Endowment Fund. 0.5%. The average of the last 40 years is 2.5%, which is nothing, right? So when the realization comes to the public, who still thinks that this will all, a federal engineer soft landing, that everything will be okay, we'll make it through this unscathed, when that reality hits home, I think there will be a mad rush to allocation of precious metals. And look, just a 2.5% allocation, meeting the 40-year average, you're talking five-fold increase in demand. We haven't seen anything yet. And so while we've expanded into some people who understand what's happening, the majority of the people out there are clueless and have zero allocation to the one asset class that, when all of this starts to crumble, will be the last man standing. And you have to ask yourself a question. And I know we talk about silver a lot, and I still think it's the greatest value ever. But why would the Bank of International Settlements reclassify gold tier 1?
Mm-hmm.
Why not something else? Why are all the central banks buying it? Why are you seeing the bleed down off of COMEX and the London Metals Exchange in physical supply? This is all misdirection. And again, it's really important for people to remember, you're not buying gold to get wealthy. It is wealth. And it's outlived 2 world wars, German hyperinflation, the Great Depression, and every pandemic. I'll say it over and over and over again. There's nothing that will last the test of time the way that gold will. And this system is going to break. People are starting to realize it yet, but not the way that they will once it breaks, because people, and especially in terms of investing, are far too reactionary. People like Bill and I who prepare on many levels, and I'm sure you too, Jean-Claude, not just with gold and silver, but with the ability to protect our family physically, with food, with water, and many other ways. Where a lot of times we're laughed at. We're called preppers and doom and gloomers, but I think it's time to realize we're a lot closer to that reality than ever before. When it happens, I think you'll see the availability of product disappear overnight, because it's been the hardest part of my job for the past 2 years, is getting product. And this is an environment where 0.5% is the current allocation. So yeah, it's been strong, don't get me wrong, but I don't think we've seen anything yet in terms of people waking up to what's coming.
Well, there's probably a reason for that. The news right now is so complicated. On one hand, we have Bernanke here on the screen telling us that, the U.S. economy has a decent chance here of avoiding a recession. Absolutely ludicrous. While at the same time, a day later, people are being treated to, wow, the Fed hikes rate by more than in the last 28 years, signaling a Volcker era return. This is freaking some people out, and in some cases, if you listen to Bernanke, you're going back to bed. Oh, everything's going to fine. Everything's going to be fine. And some other people are saying, "What the f, Bill, Andy? What the f? How do they make heads or tails out of this? How do? Okay, let's put it simple for the audience members here who have to go back after this show and explain that to their parents or to their sisters or brothers to try to figure out here how to protect themselves in this weird economy. They're trying to juxtapose these two statements that don't make any sense to them. How do they explain this to themselves, to their wives, and to their family here, how we are very much here at the end of the road and they need to take action now if they haven't already? Bill, let's start with you.
Well, first off, wasn't it Ben Bernanke who told you that subprime was contained?
Mm-hmm.
Remember that?
Yeah. Exactly.
And I do want to go back talking about crypto. There's actually exchanges now that are going through bankruptcy. So it is systemic within the cryptos across the board. And it all has to do with leverage. They've all borrowed money to start their operations. They expanded too fast. I mean, obviously they borrowed too much money. And that's the concern going forward now, is that the exchanges themselves are bankrupting. Mm-hmm. So that's going to be a huge problem.
And Bill, before you move forward, on the other question, I just wanted to say to the audience members too, this is not a crypto show. We'll have another crypto show maybe on Saturday night with Jason at 4. But if you do have your money or your coins on the exchanges, please, please, please heed the warning. Do not leave that on the exchanges. As Bill is saying here, they're in trouble now and they're going to be in more trouble moving forward. So if your cryptos are not in your possession, they're not yours. So I just wanted to say that very quickly for the audience members who might be afraid or worried about having their monies on the exchanges. Bill, now let's go back to this juxtaposition of statements and how people consolidate that in their mind to realize that really the tsunami is right here. It's not 6 months away. It's not 5 years away. It's right here, right now. What do they do and how do they explain this to their friends and family?
They may not even have to explain it after tomorrow. And I'm saying after tomorrow, tomorrow's a triple witching where you've got literally trillions in futures that have to settle. And we'll see what happens. But I mean, I'm old enough. I remember 1987 sitting at my desk, watching that thing melt down on Friday, and then they couldn't get markets open on Monday. Had a meltdown on Monday, and then they couldn't get markets open again on Tuesday. Triple witching tomorrow could be a disaster. So they may not even have to explain. I think that the best way to explain something is when you get lied to, there has to be another lie, and then there has to be another lie, and there has to be another lie. In other words, once you tell a lie, you've got to tell more lies to cover up past lies. And each lie has to get bigger and bigger. And that's where we are now. The whole system is a lie. And I mean, I would just put it this way. If you can't see it now, you're not going to see it until the train runs over you anyway. I mean, we're so deep into this, so close to this happening, that if all of a sudden you just had an epiphany today and you wanted to all of a sudden start prepping, you might have a week, 2 weeks, a month, 2 months, who knows? But there's no way you're going to be able to get all the preps done that you need to get done. You missed the boat. You slept too long. You missed the alarm clock. Yeah.
And even if you wanted to prep, it's getting harder and harder to get stuff. Try to buy a propane tank around here anyways. They're impossible to find. Go ahead.
Right. Exactly.
There's someone in the comments there that said I don't know if it's real or not, but he was saying he used to get 20% on his crypto, and now he can't access his Celsius account. Crypto is a non-interest bearing asset. So what are they doing to pay 20%? What are they doing with that crypto? And now you can't even get into it, and they've suspended all sales. I think the chairman, the CEO of Bitcoin came out publicly and said, if we file bankruptcy, people with coins on the exchange will lose them. So that's good advice as well, Jean-Claude. When the head of Bitcoin comes out and publicly says that 2 weeks ago, even mentions the word bankruptcy.
It was the head of Celsius.
It was also the head of Bitcoin, or not, Coinbase, pardon me. The head of Coinbase came out and said the exact same thing. Excuse me. The head of Coinbase came out and said the exact same thing 2 weeks ago as well.
Well, a lot of these pools accounts, again, not a crypto show, anyways, we'll get into that maybe on Saturday. But I agree with all of you right now. as Cliff High used to say, danger, Will Robinson. Like it's everything is flashing red. Even Zero Hedge had a picture of Biden in front of all of these red signals, a red flag behind him just the other day. It's absolutely atrocious, and it's apparently here it's just the beginning. For a lot of people, they're still like deers caught in the headlights. They're not believing it. We've seen this before. I think right now the best we can do, Bill and Andy, is to help the audience feel comfortable about the changes that they've already made, to feel that they're ahead of the game if they already did their prepping, if they already took their financial resources into their own hands, where they're eliminating third-party risks, they're removing the counter-party risks. What else can you say to them right now to say, hey, stand strong? Because some of them are thinking right now, oh, maybe I should sell a little bit of my silver to deal with some of this. What would you tell people right now who maybe have weak hands in all of this? They might have lost their jobs because they didn't want to take the jab a couple of months ago. What would you tell them here to stand strong in their beliefs, and also to all of these micro changes to their financial situations they've taken here in the last couple of years, listening to both your advices? Let's start with you, Bill.
Well, first off, I would say you only sell metal if you absolutely have to. You lost your job, you have a health problem, you have no other place to get it from. And I think the best way to look at it is, it's pretty obvious at this point that the world collectively is bankrupting. There's too much debt in the system, and on top of that, now interest rates are rising. You're watching deflation of assets across the board. Mm-hmm. And what are gold and silver? Gold and silver, all they are is proof positive of labor, capital, and equipment already used to create that coin or to create that bar or what have you. But the key to gold and silver, they are monies, they are wealth, but they cannot default. And we live in a world that is going to collectively default. Gold and silver will be the last two men standing.
Mm-hmm. Well, very well said. Jim, Bill, what are the people telling you right now on Just Mindset? They log in, they see your weekly calls here with the boys. What's their main concern, or what's their main question? Is there a theme right now coming out that seems to be a little bit different? Are people a little bit more on nerve? And what's the theme coming out of your clientele bases here at jsmindset.com?
Actually, I think that the biggest question recently has been regarding getting stocks and certificates out of brokerage accounts. And I mean, Jim's talked about that for years, going back to 2004 or 5 with GOTS, get out of the system.
Right.
And the biggest question is, what do I do with my IRA accounts? Can I get certificates? And unfortunately, no, you cannot get certificates from an IRA account. By law, they're supposed to be, and I'm using the word supposed to be, segregated and not on your broker's balance sheet. But we're going to find out, I guess, whether those rules were followed or not. So that's probably the biggest question, is what do I do with my retirement accounts?
Okay.
And one of my answers has been, take your retirement account and roll it into a gold or precious metals, self-directed IRA, buy gold and silver with it, and have it vaulted.
The best part of that IRA is the ability to take possession of the metal being held for you. It's a taxable event. You can distribute it or liquidate it. You could call up and say to the company, hey, send me all my gold and silver. I'm cashing out. You'll pay taxes as if you closed out your IRA and got a check. Or you could start taking distributions and say, send me X amount worth of my gold and silver. It's a taxable event, but it allows for in-kind distributions, which is really the cool thing about it. Perfect for someone who's nearing the distribution phase of their IRA.
Okay. As a customer myself of the newsletter. Okay, go ahead, Jim. Bill, go ahead, Bill.
Just say one other thing. What Andy just said is really important, because if we get to the point where gold and silver are not available, what you'd be able to do is pull gold or silver, gold and silver, whatever, from your IRA, have it delivered to you. So if we went to a point where they were unobtainable, you weren't able to buy it, you actually own it and you could have it delivered to yourself.
Right.
Okay. Okay, that's very good. And folks, again, if you guys want to have more of this information and all of these amazing conversations, there's a big community there. Go check out. There's a lot of free content there at gsmindset.com. And there's also the paid premium gold service also, which includes these weekend calls here with the boys. I wanted to ask you a question since I have you on the line also here. Bill, Jim has been saying for a number of years now that he saw when this eventually all came to where we're at now, a series of resets and a series of man-made revaluations and then a huge market revaluation of everything. Can you explain that to the audience members here who might be new to all of this to understand here that we're not going to see a fix tomorrow. We're going to see a series of fixes, and people need to be, I guess, adaptable to what is about to come. Explain that to the audience.
Yeah. What he's talking about is he believes there's going to be at least 2 resets. The first reset will be man-made. And I mean, you're already seeing signs of that all over the world. You're looking at Russia and China moving one direction. I mean, there is actually talk now of what can the Federal Reserve do to back the dollar? Can they back it with gold? There's going to be a first reset, and that first reset is going to fail because that first reset will be man-made, and it will ostensibly leave the people who are in power now still in power. That will fail and ultimately be followed by a Mother Nature reset where all asset classes reset themselves against each other through cash settlement, if you will. In other words, once the paper markets that are basically the tail that wags the dog, once they break, then it's going to be dog versus dog, and not being wagged by futures contracts, putting false pricing across different assets. So I don't think he's really looking for a series of resets rather than a first reset that's man-made that fails and then ends up as a Mother Nature reset.
Okay. And to follow up on that, you're mentioning here in this article with Greg Hunter, I encourage people to go watch that. They're pulling the plug now. It's game over. What do you and the boys, Bill, think is the timing for all of this, seeing as we are in the plug pulling now? When would you peg this first man-made reset and perhaps the second one? What could the audience expect? What are you guys guessing at right now?
Well, the first reset will probably be announced in the middle of chaos. And we're obviously, the chaos has already begun. I mean, you've got people that don't even want to open their brokerage statements, haven't opened them for the last 3 months because everything's gone down, down, down since the beginning of the year.
Yeah.
So, I mean, as far as the timing of it is concerned, it will be in the middle of chaos, and chaos is rising on a daily basis. Could it be tomorrow? Yeah. Could it be the following week or next month? Absolutely. Could it be a year or 2 years from now? No, we're not going to get there. It'll be long before that.
Okay. Let me ask you the same question. Also, Andy, you have your ear to the ground. You're connected to a lot of these market analysts around the world, including you're having your ear to the ground to all of these bullion dealers also. What are they seeing right now, and what's gold and silver sniffing out here in terms of perhaps the timing that Bill was just explaining now?
Well, you've been seeing a lot of drawdowns recently of silver and gold off of COMEX and London Metals Exchange. You see last month imports in India in May were up 675% from the year before in May. You're seeing, huge inflows. China, I think, took in 101 tons from 13 tons a year earlier. You're seeing an acceleration. This was just in the month of May, an acceleration in the accumulation of gold and silver. Getting product is not easy. the only reason we have, I think, in reality, a decent supply right now is that May is always the slowest month. For the last decade, I look back, and May is always the slowest month. Retail-wise, especially after everything we've all been through, people want to get outside, plant a garden, open their cabin, go for a walk, whatever. Especially if you live up north where I used to live, you know, come May, you've been locked inside forever. The last thing you want to do is talk about economics and buy precious metals. So there's decent supply right now, and it's hard for people to understand when I constantly is saying lack of supply will define the industry. It's been very difficult getting product. I mean, for 2 years now, the premiums on Silver Eagles are north of $10 an ounce. My whole career, no matter how many you wanted to buy, you'd never pay more than $3.39 over, ever. Anytime from 2019 below. For the past 2 years, they've been above $10 the entire time. Getting product and higher premiums are a reflection of supply and demand. And I think maybe part of what's different is that this is a global deal now. You know, you look at Europe and Japan, our allies in this Western Hemisphere deal, where, you know, the Bank of Japan and the European Central Bank, along with the U.S. Fed, they're broke. The U.S. government and those banks are broke. They're insolvent, and people around the world are waking up to inflation. They're waking up to supply chain problems. They're waking up to currencies not being a good place to keep your money. So, you know, getting product, most of which comes from outside the U.S., is getting harder and harder and harder as more people are waking up to.
Did we lose Andy's connection there? Seems to...
Did you lose me there for a minute?
You're back, Andy. Go ahead. Keep going.
Anyways, bottom line is we're competing with the whole globe for product. It used to be much easier to get product. So,
right. Let me take a question from.
I guess what we're simply saying.
Hold on, Andy. Hold that thought a second. I just wanted to grab this question here from the live chat. Teresa is saying these shows are clearly for people who have extra money, and that does not pertain to 80% of the population. Respectfully, Teresa, I don't agree with that statement. Much to the contrary. Andy, how would you answer that question here? And why is this education so important? And why are we actually speaking to the other people who are not part of the cabal here in trying to protect themselves moving forward here? What would you say, Andy?
Well, I'll put it to you this way. We've done $7 billion in transactions. The biggest single sale I've ever done is $9 million. Our average sale is $30,000. We work with everyone. We don't have a minimum order. And I think that's the whole purpose of having these discussions. That level of wealth, the people that are pulling the strings, that's a whole different, they don't call a retail company in the United States to buy metal. They take delivery right off of Comex of 100-ounce gold bars and 1,000-ounce silver bars and have them stored in a Swiss vault or whatever they're doing. Quite to the contrary. We are a company that has no minimum order, no preconceived notions, and we work with everyone. And your silver tarot card bars are the perfect example. We'll sell one 10-ounce bar. You know, we don't have order minimums, and this is not for. This is for everyone. Gold and silver have been wealth for 5,000 years, and I think if you look at it that way, it doesn't matter how much you own. It's a percentage of your assets, what you can put away in real money. And if that is only a few $100 or a few $1,000, so be it. That's great. We'll never make you feel any different than someone who spends a few $100,000 or a few million. Everyone is treated the same way with our staff.
Right. Well, thank you. I appreciate that. And Bill, I'll give you a shot at this answer as well. Why is this important to share this information? It's not just about buying gold and silver. It's also being able to transition during the crisis we're heading into now. Go ahead, Bill.
Yeah, we've all spoken many times on different preparations, and gold and silver is just one of them. And Andy, I would say your answer was excellent, and my response would be one of your subscribers is a troll.
I do have those. Yes, it's a sign of I won't even get into it. But yes, I do have some of those once in a while. I believe maybe Teresa was being honest, and I thought it was important to at least have the conversation anyways, because again, it's not just about buying silver, gold, or crypto. It's about understanding what's going on and not being hoodwinked again by all of these policymakers that really don't have our best interests at heart. And I think this is why we're having these conversations. Speaking of having these conversations, we're almost at the end of the show. Bill, explain to the audience members, I did a little bit here at the beginning of the show, what they can find here at JS Mindset, why these conversations are important, who's writing here, what they can find on the free site, and also what's in it for them here on the Gold Premium membership as well.
Yeah, we basically, we post articles, videos, etc., of things that we think are important from not only just a financial standpoint, but from a social standpoint. We have a free side and a subscription side. The subscription side, I post some articles. We have a couple people that write articles. And really the key to the subscription side is we do a 1-hour call each week. Yeah. There's 3 of us now that are on the call. And I mean, I know you listen to them, JC. I mean, you get information that's worth the cost of admission right there is just the call, because you get information that you're not going to get elsewhere.
Yeah, absolutely. I absolutely love them too. And again, it gives me the reassurance too, because I've been trying to understand and make moves for myself, yet everything I hear on the mainstream news is contrary to what you guys are saying. And so I have to constantly go back to the source, look at the real numbers, people who have our best interests at heart, to really figure out where we're at in this whole game and to stay put into our long convictions and why we're doing this. Of course, that's why we're all into this. Andy, as we finish and round out the show, also, let me just go back to the silver specials for this week. You talked about the difficulty obtaining products here. I just removed some of the products that are no longer available here just before the show. What do you have for the audience members left here for these specials for this week?
Yeah, we have the 2022 Silver Britannia. It's the first time in a long time that I've even issued a 1-ounce coin as a special, because they've been so hard to come by. I have a nice amount in stock at $5.75. That should be as good as 99% of the companies, or better than 99% of the companies in the country. I had a client who sent me a huge amount of silver from Singapore in the kookaburras, and I've had those around for a while, and then they kind of fell off the radar. I have a couple thousand of them left in stock, so I'm going to drop the price on those to $5 over spot from $5.50. And you know, if you're looking for a value, those 10-ounce kookaburras at $5 over spot, you won't find anyone in the country even close to those, and I think they're a hell of a value. They're about yay big, but a great choice nonetheless, and maybe my favorite choice of just about anything that we have in stock from a value standpoint right now. In comparison,
say that again. Did you say you were reducing that price even further, Andy? Say that again.
$5 over spot.
Okay, I'll go and change that graphic, folks, right after the show. But if you fill out the form now, Andy and the brokers will fulfill it at that price at $5 over spot.
And it's just for your listeners only, so.
Really good. I appreciate that. So guys, you can find that at beyondmystic.net/silver. And if you guys are on the Canadian side of the audience as well, these are furnished by MF Bullion Canada here on the Canadian side, and these are this special this week, of course, are the Royal Canadian Mint silver maples at $7.99 over spot. That may look high to you, but it's actually about $2, and in some cases $3 lower than most of the competitors in Canada who are actually out of this product. So really, really good special there as well at mfbullion.ca. Let's do a quick round. Maybe the one last time here, last words of wisdom. We're heading into the pulling of the plug, as Bill was saying here on the last interview. We're heading into this crisis here. If you look at even the mainstream news, they're telling us here, they're signaling maybe a return of the Volcker era. If you guys don't know what we're talking about, you're talking about 20% interest rates. We're nowhere close to that yet, but we might be getting to crazy things like that as well. So Bill, last words of advice, anything else you want to share with the audience before we go today?
Yeah, I would just simply say, if you have the mindset of preparing, do the best you can. I guarantee you, every one of us will have forgotten something, and don't kick yourself for whatever you forgot. Just do the best you can.
Very good. That's great advice. And Andy, how about you? Any last words of wisdom?
I guess the best advice I can give someone is to trust your gut. Because, you know, the people that are listening to this show, who are even open to listening to it, we're the pimple on the elephant's butt. And that'll change. Maybe the elephant wakes up someday soon, but trust your gut, and, you know, realize you can only save the world one person at a time, starting with yourself and your immediate family. So certainly always appreciate being here. It's always great to see my good buddy Bill, and appreciate the trust. We take that very, very, very seriously, Jean-Claude. When your listeners reach out to us, we take it very seriously, and we'll only treat them with the kindness and respect we would treat our friends and family. So appreciate the opportunity to be here once again, and to chat with your fantastic subscribers.
Well, that's amazing. I love having you on, as always. A big thank you to you, Mr. Bill Holter, and to you, Andy SCHECTMAN. This was the Crisis Ahead special report here on Beyond Mystic. Please remember to like, share, and subscribe here on our channel. And stay tuned this evening at 8 o'clock Eastern. Penny Kelly will be back for a special report, Breaking the Clouds. A lot of new data coming out there, as well as this crypto show on Saturday night, The Wacky Woo with Jason at 4. And it might get really wacky there as well. So you guys know what that means. I love you guys. Have a great day. We'll see you soon. Au revoir.